You think this could be a headwind for this company?
Well, I think what's so interesting here is this map bug, as they're calling it. This is a technical glitch that minimized Twitter's ability to target advertising and then also report back how well those ads were doing to advertisers, which is obviously key. Everyone cares about measurement and targeting. It didn't affect everyone, and the effects, it sounds like, should be somewhat limited because they're starting to fix it. But in a quarter where they managed to grow users so much better than expected, they added twice as many new users in the quarter than projected. This was a quarter where they should have been able to also show better advertising growth. And to see advertising slow down, the question now is, was this really a glitch that they can limit to 1 or 2 quarters of impact, or is there some bigger challenge to their advertising business?
Michael, there supposedly is going to be a launch of a new version in 2020, and I'm wondering, in your view, if this is going to be a permanent headwind towards advertising revenue, or if this is a fixable problem.
I don't think it's permanent, which is why we stuck with our buy rating on the stock. I mean, per our PAI, our Pivotal Advertising Insights product, we actually had picked up, we thought there was going to be weakness in the U.S., both in the third quarter and fourth quarter, so we actually had cut our estimates about a week and a half ago. So it didn't catch us as much by surprise. I think the street was very much caught off guard. I think what did surprise us, and I suspect because the Japan market is so heavily exposed to map and application downloads, like that actually had contracted, and the comps get significantly easier. So my gut says this is probably more temporal. Where I think it's a challenge for the stock is you basically got an overt lower for the fourth quarter. You know that, as they talked about on the call, they're going to have headwinds in the front half of the year. You sort of don't know when this gets fixed. I think the company's done a laudable job turning user growth around. I think that they should see even better user growth next year around the elections and the Japan Olympics. But your next catalyst is getting Q4 earnings, the Q1 revenue guide, where my suspicion is you'll probably see a pretty broad dispersion of revenue numbers, and they're going to guide OpEx for the full year. So your next update may be another estimate revision lower. I think that's a challenge for the stock.
You totally hit on two things that were on my sort of uninformed mind, and that is, one, it's a political year, and you'd think Twitter is going to be the platform where everybody's going to want to play, and the Olympics. But it feels like this, Julia, Michael, you tell me, is going to be a real show-me kind of stock. Michael?
100% agree with you. I do agree with you.
Yeah.
But I mean, look, I'm chartered not with what's the stock going to do over the next 2 months. I mean, gun to head, my guess is it probably doesn't work well. But, to form a view that's based on a 12, 18-month view of the company. So I think this will basically get righted. But we're not talking about Facebook. We're not talking about Google, Amazon, where they've built credibility over a course of multiple years around things like OpEx. And, it's for a company like Twitter, you probably have got some rebuilding and some faith that needs to get reestablished.
Last word is yours, Julia.
This shortfall was so unexpected because this story has been very different for Twitter. For so long, it was all about the user growth. Can they grow users? Can they grow users? They started to grow users. They showed that they had an advertising business that worked. So that's why, to show that they were both growing users and disappointing on advertising was such a discrepancy from expectations and such a surprise. We'll see about Q4.
But it came out of nowhere, right? I mean, basically.
All right.